Welcome back, everyone. I'm excited for today's deep dive into a topic that's, well, it's on everyone's mind, but sometimes it gets pushed aside. Financial planning.
Hmm.
Planning for the future and all that.
Right.
So we're going to be talking about the role of life insurance and annuities
Okay.
and how they fit into the bigger picture of Social Security and retirement plans.
Yeah.
And we've got some really interesting source material.
Oh.
It's kind of a mix of in-depth explanations and real-world examples.
Oh, nice.
So by the end of this deep dive, you'll have the knowledge to confidently navigate these topics
Great. Yeah.
and make informed decisions about your financial well-being.
Sounds good.
So let's jump right in. We'll start with life insurance.
Okay.
And I came across this interesting concept called constructive delivery.
Oh, yeah.
Have you ever heard of that?
Yeah, it's a fascinating legal point. Basically, it means that once the insurance company mails your policy to the agent, it's considered delivered, even if you haven't physically received it yet. It highlights the importance of that moment
Oh, interesting.
when the company relinquishes control of the policy.
So if the insurance company sends the policy,
Right.
you're covered
Yes.
even before you sign anything.
That's the idea.
That's kind of wild.
It is.
But the agent will still typically deliver it to you personally, right?
Yeah, that's good practice. It allows the agent to explain the details, answer any questions, make sure you understand the terms
Right,
of
right.
the policy.
That makes a lot of sense. Now, what about the difference between
Sure.
group life insurance, like through work,
Mhm.
and individual policies?
Okay.
Is relying solely on group life insurance risky?
That's a great question. Group life insurance can be a fantastic benefit,
Right.
especially when you're starting out,
Uh-huh.
often more affordable, and you might not need a medical exam.
Okay.
But the coverage amount is usually limited. You don't have much control over the terms. Plus, it's tied to your job. So if you leave, you could lose your coverage.
Oh, I see. So it's kind of like renting an apartment versus owning a house.
That's a great analogy. With an individual policy, you customize the coverage amount,
Yeah, okay.
the type of policy to fit your needs and budget. You own it, goes with you, even if you change jobs.
Gotcha. That makes me think about the underwriting process.
Sure.
How do insurance companies assess risk and figure out what premiums to charge?
It's not exactly a secret, but they consider various factors
Okay.
like age, health, family medical history, lifestyle choices. Things like smoking or engaging in risky hobbies can impact your rates.
Oh, really?
They're basically trying to predict how likely you are to file a claim.
Interesting. So it really does pay to prioritize a healthy lifestyle.
Absolutely. The healthier you are, the lower your risk, and typically the lower your premiums.
Good to know. Okay, let's move on to annuities.
Right.
I know they're designed to provide income during retirement, but can you explain how they actually work?
Sure. Think of annuities as the opposite of life insurance.
Okay.
Life insurance protects your loved ones financially if you die too soon. Annuities protect you from outliving your savings by providing a guaranteed stream of income
I see.
throughout your retirement.
Okay. But there are a lot of different types of annuities out there.
You're right.
I've heard of fixed versus variable, immediate versus deferred.
Yes.
What are the key distinctions?
With a fixed annuity, you get a guaranteed interest rate. So your payments remain predictable.
Okay.
If you're risk-averse, prioritize guaranteed income, a fixed annuity could be a good fit.
Got it. What about variable?
Variable annuity invests your money in the stock market.
Oh, okay.
So your payments fluctuate based on market performance.
So choosing the right type depends on your risk tolerance and how comfortable you are with the ups and downs of the markets.
Exactly.
Okay.
There are also immediate annuities, which start paying out right away, and deferred annuities, where you contribute over time and payments begin later.
Got it. You also mentioned this interesting option called life with a period certain payout.
Yes.
What's the advantage of that?
That's a great option for people who want to ensure their loved ones are protected. Guarantees payments for a certain number of years,
Oh.
even if the person who purchased the annuity passes away sooner.
Oh.
For example, if you choose a 20-year period certain, but pass away after 10 years,
Right.
your beneficiary would continue to receive payments for the remaining 10 years.
It's like built-in peace of mind.
Ew.
Now,
Okay.
before we move on to Social Security,
Sure.
I'm curious about the tax implications
Good question.
of annuities.
Annuities grow tax deferred, meaning you don't pay taxes on the earnings
Okay.
until you start receiving payments.
I see.
This could be a significant advantage for retirement planning.
Okay, I'm starting to see how all of this fits together.
Yeah.
But let's talk about Social Security.
Okay.
It seems like everyone has an opinion about it, but few really understand how it works.
That's true.
Can you give us a clear breakdown?
Social Security is a federal program
Okay.
that provides retirement, disability, and survivor's benefits.
Mm-hmm.
It's funded by payroll taxes.
Yeah.
Essentially, you pay into it while you're working,
Right.
and then you become eligible to receive benefits later in life.
And you need 40 quarters of credit,
Yeah.
meaning 10 years of work
That's right.
to be fully insured
Yes.
for those retirement benefits. Right?
That's right. And it's important to remember that Social Security was never designed to be your only source of income in retirement.
Right. It's more like a foundation.
Exactly.
Right. But it does offer important protection.
It does.
Especially those survival benefits you mentioned.
Absolutely.
Can you elaborate on those?
Sure. There's a lump sum death benefit of $255 paid to survivors of deceased workers.
Okay.
And there are ongoing monthly benefits for eligible spouses and children.
It really acts as a safety net
Yes, it does.
for families.
Yes.
Now, I know the calculation for Social Security benefits is complex,
Yeah, it can be.
but what's the key takeaway?
You don't need to memorize the formula, but the main point is the more you earn and contribute over your working years,
Right.
the higher your potential benefits will be.
So a higher salary generally translates
Yes.
to higher Social Security benefits
Yes.
down the road.
Exactly. However, there is a cap
Okay.
on how much of your earnings are subject to Social Security taxes each year.
Interesting.
Now, let's broaden our scope a bit
Okay.
and talk about the whole spectrum of retirement plans.
Okay.
I know there are different types,
Yeah.
some offered by employers,
Mm-hmm.
others for self-employed individuals. What are the key distinctions?
I know. I get confused with all the different acronyms and options.
I know it's a lot.
It feels like a whole different language sometimes.
It can definitely seem that way. One of the most important distinctions is between qualified and non-qualified plans.
Okay.
Qualified plans like 401ks and IRAs
Right.
are approved by the IRS and offer significant tax advantages. They do come with some regulations,
Mm-hmm.
but the tax benefits make them very attractive for saving for retirement.
And those non-qualified plans offer more flexibility, but without the tax perks.
Exactly.
Got it.
When it comes to employer-sponsored plans, you have a few options.
Okay.
There are defined benefit plans,
Right.
like traditional pensions,
Mhm.
which promise a specific monthly benefit at retirement based on your salary
Mhm.
and years of service. But those are becoming less common these days.
So what's more prevalent now? What kind of plan does my company probably have?
It's more likely your company offers a defined contribution plan, like a 401k.
Okay.
With these plans, both the employer and employee can contribute,
Uh-huh.
and the money is invested.
Right.
So your ultimate payout depends on how well those investments perform over time.
So in a way, you're taking on more risk,
Yeah,
but you have the potential for more reward.
that's a good way to put it.
Mhm.
It's crucial to understand how your employer's plan works, how much they match, and how to maximize your contributions. This is where a financial advisor can be incredibly helpful.
That makes sense. What about for our listeners who are self-employed?
There are great options for them as well.
Okay.
KEO plans
Mhm.
are specifically designed for self-employed individuals and small business owners.
Right.
And SEP IRAs
Okay.
offer a straightforward way for them to save for retirement.
Gotcha.
Both provide valuable tax benefits.
So there really are options for everyone,
There are.
regardless of their employment situation.
Exactly.
Now, we've talked about qualified plans, but what about those IRAs, traditional versus Roth?
Okay, good question.
What's the difference, and how do you know which one is better?
The key difference lies in when you pay taxes.
Okay.
With a traditional IRA, your contributions are typically tax deductible,
Uh-huh.
meaning you reduce your taxable income in the present,
Right.
but your withdrawals in retirement are taxed as ordinary income.
So you're deferring
Change
the
it out.
taxes to later on.
Yes.
Got it.
Right. With a Roth IRA,
Okay.
you contribute after-tax dollars,
Mm-hmm.
meaning you don't get an immediate tax deduction,
Okay.
but your withdrawals in retirement are completely tax-free.
Interesting. So it seems like choosing between a traditional and Roth IRA
Right.
depends on your current tax bracket
Yeah.
and what you anticipate your tax situation to be in retirement.
Exactly.
Okay.
There's also the option of a rollover,
Right.
where you transfer funds from one retirement account to another without incurring penalties.
Okay.
This can be helpful if you change jobs or want to consolidate accounts.
I know a lot of people who could benefit from that information.
Yeah, me too.
So, to wrap up this first part of our deep dive,
Okay.
We've covered a lot of ground,
We have.
from life insurance to annuities,
Yeah.
Social Security,
Ah.
and different types of retirement plans.
It may seem overwhelming, but remember, it's all about building a solid foundation for your financial future.
And in the next part of our deep dive,
Yes.
we'll get into some practical applications. Great.
Of these tools and strategies, stay tuned.
Looking forward to it.
Welcome back to our deep dive into insurance and retirement planning. In part 1, we covered the basics of life insurance, annuities, Social Security, and different types of retirement plans.
It's a lot to take in.
It is. Now, how can we actually use this knowledge to build a secure financial future?
That's the million-dollar question, isn't it? A good place to start is by figuring out how much life insurance you actually need. One approach is the human life value approach, which calculates your expected lifetime earnings to determine the appropriate coverage amount.
So it's basically putting a dollar value on your future earning potential to protect your family if something were to happen to you.
Yeah. It's about providing for your loved ones, making sure they're taken care of.
What other methods are out there?
Another common approach is the needs approach, which focuses on identifying your specific financial needs and obligations.
This includes things like final expenses, mortgage payments, outstanding debts, future education costs for children, and the income your family would need to maintain their lifestyle.
So, like creating a financial safety net for your family's future.
That's a great way to put it.
It helps you see how much coverage you would need to fill those potential financial gaps if something were to happen.
Exactly.
This is making me think about retirement planning more broadly.
Yeah.
How do all these pieces fit together? Life insurance, annuities, Social Security, and retirement plans.
Yeah, it's easy to view them as separate, but they really are interconnected parts of a larger plan.
Okay.
Think of Social Security as the foundation, providing a basic level of income in retirement.
Okay.
Then you build upon that foundation with your employer-sponsored retirement plan, like a 401k, or individual plans like IRAs. These plans allow you to accumulate savings and benefit from tax-deferred growth.
And annuities can provide a guaranteed stream of income on top of that.
Exactly, like an extra layer of security and predictability. Yeah. It's about having that peace of mind, knowing that you'll have a steady stream of income throughout your retirement.
And life insurance plays a vital role, too.
Absolutely. It's there to protect your family's financial well-being if you pass away unexpectedly, ensuring they can cover those essential expenses and maintain their standard of living.
So it's really about protecting your loved ones and making sure their future is secure.
Exactly.
Even if you're not there.
Even if you're not there.
This reminds me, I always hear people say you should start retirement planning early. Why is that so important?
The earlier you start, the better, even if it's with small contributions.
Okay.
That's because of the power of compounding. Essentially, your money earns interest, and then that interest earns interest, creating a snowball effect over time.
It makes a lot of sense.
It's amazing.
But I think a lot of people, myself included, feel overwhelmed by all these options and decisions.
Yeah, it could be a lot.
It's hard to know where to begin. Where can people go for guidance?
A qualified financial advisor can be an incredible asset. They can provide personalized advice, help you navigate those tough decisions, and hold you accountable to your goals. Think of them as your financial co-pilot.
Yeah, okay.
Guiding you through the complexities of building a secure future.
Okay, that's really helpful. So we've covered a lot of the main concepts.
We have.
But I love those little details that stick with you.
Oh, yeah.
Anything come to mind?
Definitely. Remember when we talked about group life insurance? Well, did you know that the employer actually holds a master contract with the insurance company?
So it's one big policy covering all the employees?
Yes, exactly. Employees receive individual certificates as proof of coverage.
Okay.
But it all falls under that master agreement.
That's interesting. What about annuities?
Annuities. Let's see.
Anything we didn't get to?
We talked about fixed and variable annuities, but there's also a type called an equity indexed annuity, or EIA. It's a hybrid that offers the potential for higher returns linked to stock market performance, but also provides a guaranteed minimum return.
So you don't lose money if the market takes a downturn.
Right. You get the upside potential without the downside risk.
That sounds perfect for someone who wants to participate in the market's growth.
Yes.
But also wants some downside protection. What about Social Security?
Social Security.
Any lesser-known details about that?
One thing people often forget is that Social Security isn't just for retirement. It also provides disability and survivor's benefits, acting as a safety net in various life situations.
Yeah, it's important to remember those other aspects of the program.
It is very important.
It really does offer more comprehensive protection than many people realize.
Absolutely.
What about all those retirement plan acronyms?
Oh, yeah, those.
I feel like we could use a cheat sheet.
We could.
We touched on ERISA, the Employee Retirement Income Security Act, earlier.
Right.
It's a federal law designed to protect the rights of workers covered by employer-sponsored retirement plans.
It sets standards for plan management, vesting, reporting, and disclosure,
Yeah.
ensuring that plans are fair and transparent for employees.
Right.
It's a key piece of legislation that most people aren't aware of.
Yeah, it's often overlooked, but super important.
Now, when it comes to employer-sponsored plans, you mentioned defined benefit and defined contribution plans.
Right, the most common ones.
But there are also less common options,
Yes, there are.
like money purchase plans and target benefit plans.
Right.
Can you break those down a bit?
Sure. In a money purchase plan, the employer commits to contributing a fixed percentage of your salary each year, regardless of company profits. This provides more predictability for employees.
Okay, I see.
Target benefit plans are similar to defined benefit plans in that they aim for a specific retirement income target,
Right.
but they use a defined contribution structure.
So it's like trying to combine the best of both worlds,
Right.
predictable employer contributions with the potential for growth.
Exactly.
What about plans for self-employed folks? Self-employed, let's see.
Any hidden gems there?
We mentioned KEO plans and SEP IRAs, but did you know that with a KEO plan, self-employed individuals can actually contribute significantly more compared to traditional IRAs? A huge advantage for those who are self-employed.
That's a great point. Now, I remember you mentioned rollovers, transferring funds from one retirement account to another without penalties.
Right, relievers.
When would someone want to do that?
There are several scenarios where it makes sense. For example, if you change jobs, you might want to consolidate your old 401k into an IRA to simplify your accounts and have more investment choices.
Okay.
Or you might choose to roll over a traditional IRA into a Roth IRA to take advantage of tax-free withdrawals in retirement.
So it can be a strategic move,
It can be.
depending on your circumstances.
Exactly. It's all about finding what works best for your individual situation.
Any tips for navigating rollovers?
To avoid potential tax headaches, always try to have the funds transferred directly from one custodian to another. Don't take possession of the money yourself.
Got it.
And when in doubt, consult a tax professional or financial advisor.
Great advice. So much to remember. But before we move on to the last part of our deep dive,
Sure.
are there any other interesting details about life insurance we should know? I feel like we just skimmed the surface earlier.
Yeah, we did. We talked about the human life value approach and the needs approach for determining coverage.
Right.
But remember, life insurance can do so much more than just provide a death benefit. Have you ever heard of buy-sell agreements?
Vaguely, but I could definitely use a refresher. What are they all about?
They're often used in business partnerships or closely held corporations
Okay.
to ensure a smooth transition of ownership if one of the owners dies or becomes disabled.
Great.
It outlined how the deceased owner's share of the business will be purchased and funded, often using life insurance policies.
So it's like a prearranged agreement to avoid conflict
Exactly.
and keep the business running smoothly, even during a difficult time.
Yes, that's the idea, to provide that continuity and stability for the business.
And another interesting application of life insurance is key person insurance. This type of policy protects a business against the financial loss that could result from the death of a key employee, someone whose skills and knowledge are critical to the company's success.
Right. It helps mitigate the risk of losing a valuable employee.
That's such a smart way to protect a business. Any other interesting uses for life insurance you can think of?
One more I wanted to mention is deferred compensation. This is an executive benefit where an employer defers a portion of an employee's salary until a later date, often retirement.
Okay.
It can be a great way to attract and retain top talent.
It's like a long-term incentive plan.
Yeah, like a golden handcuffs.
That rewards loyalty and performance.
Exactly. It's a win-win for both the employer and the employee.
Wow. So much to consider. Life insurance is so much more versatile than I realized.
It really is.
Yeah.
There are so many different ways it can be used to achieve your financial goals.
I'm feeling a little overwhelmed, but in a good way.
That's the goal. We want to equip you with the knowledge you need to make informed decisions.
Definitely. And stay tuned for part 3,
Yes.
where we'll wrap up our deep dive with some final insights and questions to keep you thinking about your financial journey.
Until then, remember, Knowledge is power. Taking proactive steps today can make all the difference in securing your financial well-being tomorrow.
Welcome back to the final part of our deep dive into insurance and retirement planning. We've covered a lot of ground, from the intricate details of insurance policies to the broader concepts of retirement planning and financial well-being.
It's been quite a journey.
It has. Now that we've absorbed all this knowledge,
Yeah.
let's talk about putting it into action.
Okay.
Where do we even begin?
A great starting point is to take a good, honest look at your current financial situation.
Okay.
Analyze your income, expenses, assets, and debts. This will give you a clear picture of where you stand financially and highlight areas for improvement.
It's like taking inventory of your financial toolbox.
Exactly.
Before you start building. Okay, once you have that snapshot, what's next?
Then you can start setting specific and achievable goals. Do you want to buy a house? Retire early? Travel the world? Whatever your aspirations are, write them down and create a roadmap to get there.
I love that, turning dreams into actionable plans.
Exactly.
But life is full of surprises, and our plans need to be flexible. What happens if you get sick, lose your job, or face a major unexpected expense?
That's why having a solid financial safety net is so important. Emergency funds, disability insurance, and other forms of protection are crucial. They help you weather those storms without derailing your long-term goals.
So it's about having a backup plan
Exactly.
for those inevitable detours in life.
Life throws curveballs. You got to be prepared.
But with all this complexity, is it ever a good idea to just DIY your financial plan? Or should you always seek professional guidance?
While there are great resources available for DIY financial planning, a qualified financial advisor can be an invaluable resource. They can provide personalized advice, help you navigate those tough decisions, and hold you accountable to your goals. It's like having a trusted guide on your financial journey.
Speaking of that journey,
Yeah.
I want to leave our listeners with a final thought-provoking question.
Okay, shoot.
If you could wave a magic wand and design your ideal retirement, what would it look like?
That's a wonderful question to ponder. It's not just about finances. It's about envisioning the lifestyle you want, the experiences you crave, and the legacy you hope to leave behind.
What brings you joy?
Exactly.
What are you passionate about?
Yeah.
How do you want to spend your time? These are all important things to consider.
Absolutely.
Uh,
Start taking steps today to build that future you desire.
yeah.
Even small changes can make a big difference over time.
We've covered a lot of ground in this deep dive.
We have, from life insurance and annuities to Social Security and all sorts of retirement plans.
It's been a fantastic exploration.
It has. And remember, financial planning is an ongoing journey, not a one-time event. It's about making informed decisions, adapting to changing circumstances, and staying committed to your goals.
And at the end of the day, it's about finding peace of mind, knowing that you're on the right track to building a secure and fulfilling future for yourself and your loved ones.
Couldn't have said it better myself. Thanks for joining us on this deep dive.
We hope you enjoyed it. Until next time, remember, knowledge is power. Taking proactive steps today can make all the difference in securing your financial well-being tomorrow. See you next time.